What are the best ways to go right now in the current market with your DSCR loans? What are the options out there? So first, let's start with some of the lenders out there. They have a standardized kind of 5, 4, 3, 2, 1 declining prepayment penalty. And let's face it, the rates will probably come down in the next 2 or 3 years, maybe even sooner, probably 18 months. I don't have a crystal ball, but anyways, that being said, you're going to get a lower rate, potentially going with a longer 5-year step down prepayment penalty. But my thought process is that there should be opportunity to probably refinance in the next 24 months. So one is not every lender is the same. Some offer a 3-year prepay, some offer 5. Some are now offering buy down options to buy down to a 1-year term, which could get quite expensive. But there are options, but it may be cheaper than going into a 5-year step down, and then next year you decide to refinance and you're penalized with a 4% prepayment penalty on the existing loan balance, right? That's pretty significant. So what are your options? Your options could be a 2-year bridge loan, which I've been preaching is a good option right now because the rates are relatively attractive compared to the 30-year DSCR loans. They're off a little bit, but then you're not stuck in a prepayment penalty when there might be some advantageous times ahead to refinance the property, right? So that's an option to think about. Will 24 months give you enough time to see a drop in rates or a different circumstances or change in circumstance? Maybe it's a short-term rental property and it hasn't been run yet, and in 12 months time you have now 12 months of verification of income. Maybe that gets added to your tax returns so you can qualify from a conventional loan standpoint, or maybe you can refinance using proof from Beau or Airbnb, which many of the DSCR lenders will accept a 12-month history on a refinance. So if you go into a projection-based DSCR loan, a lot of those lenders have a standardized 5-year prepayment declining. Some do have a 3-year, but the majority have 5. So I'd be looking for a shorter term prepayment penalty, even if you're paying a little bit higher rate, because I think there'll be opportunities to refinance here in the next 24 months. So that's just my 2 cents on the matter. There are options out there. Just get an idea of what the best options might be for your situation. If you're getting a pretty good rate and you don't think you're going to be refinancing to harvest equity, and the deal makes sense, then yeah, sometimes you lock in a 5-year prepay penalty. But if you're looking to probably refinance and pull cash out in the future, it may be advantageous to really look around and see what your options are. Does it make sense to buy down your prepayment penalty? Does it make sense to go into a bridge loan for 2 years? All these factors will, if you think about it now versus later when you're going to refinance or sell the property, it's going to save you thousands of dollars.
Hi, this is Beau, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
So what's the difference in rate if you went into a bridge loan versus if you went into a DSCR loan? What's the difference in payment annualized? What's that really going to affect you? And then see if it makes sense to do a bridge loan or to do a prepayment penalty buy down. Anyways, that's what we're looking at with DSCR loans. Obviously, if you're still using your conventional bandwidth, then you don't have to deal with prepayment penalties with agency conventional loans. At the same point, I do think if you're planning on growing your business, at some point it just doesn't make sense to buy with a conventional loan. I think getting started, and you can always refinance your conventional loans into a portfolio DSCR loan, get them out of your personal name into a business entity. But I like doing it from the start, owning them in the business, and they're always owned in the business, never in my personal name. And it's credit score driven. There's no DTI requirements. So that's why I like this product. Now, granted, the rates aren't as good as conventional, but when it comes down to qualifying and ease of transaction, DSCR loans are advantageous for investors. Anyways, hope you enjoyed this short episode. We'll see you on the next one.